Phoenix of the team.
All right, ladies and gentlemen, welcome back. We got another chart talk coming at you midday. Market's under some pressure. Bennett, I think you had a little message to the troops you wanted to get across.
I'm about to shoot myself. I'm kidding. But yeah, so in the prior video, we mentioned something where we finished the entire chart talk. We were fully done, and then Blue pulled out the power cord, and we lost the whole thing. But anyway, what we were saying was we've been feeling the love from the members, which we always appreciate. But we haven't really been seeing it. We haven't been seeing it in the videos. Everyone loves the chart talks, but a year ago we used to get 100 plus, little thumbs up, which cost nothing, and lately it's been a little dry in the thumbs up department. So I had an idea with Shake where I said, going forward, everyone loves these things so much. Until we see 100 thumbs up on this video, we're not going to make the next chart talk until that happens. So if you guys really do enjoy these videos, you find them very helpful. We're not asking for a lot here. It is free to drop a little thumbs up. And when we see it, we'll make the next chart talk. So that was the little, which I guess I had the bad karma because we lost the video once I said that. So we'll see how this goes.
I want to show you something. Let me adjust my camera real quick, Bennett.
Okay.
Let me show you. Let me show you what some good dogs are looking like. Huh? Good dogs just sitting here, not making a racket, no pulling any power cords out. They're just kind of sitting, chilling, minding their own business. Maybe there could be a bigger focus on.
Do you notice the difference between your three dogs and this little dog?
All right. So SPY's been under some constant pressure. We see the downtrend that we've been in. It's been a pretty swift move lower since the March top, a little early April top. We talked about this in the last one a little bit. It is orderly selling, but the steepness of the downtrend is on a record pace. It's actually one of the worst down moves for NASDAQ. If you look at how NASDAQ moved lower, yes, it did have a big crash, but it took so much longer to matriculate to down 30% than what we are now. So, discounting COVID, which was 33 days of straight hardcore down movement selling. But this one is a very, very fast move lower. So it seems like anytime we get a little pop, we kind of sell off immediately in the indices. You see these arrows I got. It's every time the market makes a strong move, boom, they pull the rug. Strong move, pull the rug. Strong move between Friday and yesterday. And then what do they do today is they pull the rug. Now, today's rug pull is on the back of the Snapchat earnings, where it wasn't even earnings. They just came out of nowhere and said, our guidance is going to be way below estimates. We're not seeing any traction in the advertising market. We're going to have to slow down hiring. All these things that are just, recessionary signals. And then we saw anyone who makes money off advertising, Google, Trade Desk, they all traded lower after hours on that. And that's what kind of started today's rug pull. So we're still in this environment. There's two ways to trade this environment. It's either, trade things small with wider stops, or shrink your time frame, be heavy, and, focus on the intraday action. So you can't do both. You gotta focus on one of those things. I mean, you can have different trades going on, obviously, but you don't want to be big and giving things a lot of room. This isn't the time to, necessarily kill it. It's more of a time to, maintain and try to get some wins and P&L on the board and survive for the better days that are surely ahead of us. What are you thinking over there?
So yeah, you touched on a lot of points. I think one of the bigger ones you mentioned, like the steepness of this drop, and again, in the last chart talk where we lost the video to Blue, but I was explaining how as each major market drop or crash, whatever you want to call it, each one has subsequently, or the major ones have gotten faster in their drops. You think of like the dot-com bubble, it took nearly a decade to reclaim that prior high. You think of the financial crisis, took almost half a decade from peak to bottom back to prior peak, almost 5 years to reclaim that. And then we have the COVID, a month down, but took nearly 6 months to get back to its prior high. And now we're a few months into this current drop. So we're seeing these drops accelerate to the downside, getting much faster. And like our 2 cents, or at least mine, has been just information being disseminated so much quicker than it is now than it was in the past, that I think we'll continue to see these faster drops and subsequently these faster rebounds as well. But for now, it does seem like the overall action is just lower prices. Again, you mentioned the orderly selling in the SPY. Nothing has been too out of the ordinary. Nothing has been very dramatic or out of that very clear breakdown stage. And until we get like a hard shakeout, and then we can start to base out, I think that fear kind of stays there. And I think with a lot of charts during those breakdowns, you need to think of like the Pelotons and the Zooms when they're in that just perpetual downtrend, it just the stocks seem dead. And then when they do start to base, I'm not saying those names start to base, but when the stock or the sector or market starts to trade sideways and bases, that fear does start to subside. But we haven't seen that last real shakedown lower to really get like that max amount of fear for any possible kind of relief rally or anything like that. But I think
I did have a friend say who's he works in tech, and he was talking about all the different earnings, and I got the first signs that were almost, I don't think we're near bottom, but that buyers are getting straight exhausted. He said, I can't even imagine the days of an uptrend and things just like floating higher and all these things. I was like, all right, that's a good sign. But I just said that, closer, one step closer. And what did you say today about 401ks?
This past week I've been doing a lot of 401k reviews, and it's not 401k reviews of like, I want to increase my allocation, I want to invest more. It's all the, I want to get out of the market, I want to get into cash, and I want to wait until things get safe again. And the last time that I had these phone calls in the last 2 years, I haven't had a single phone call about this idea except March of 2020. And I must have had, I don't know, I don't want to like say thousands, like at least 100 phone calls about, I want to get out of my, it was like, I felt like Groundhog Day. I wish I could have recorded my answer and just like put it in front of the person so I didn't have to explain it to them. But every person in March wanted to do the same thing. They want to cash their 401k. They want to wait till it was safe to get back in. And it was just an emotional strategy that is not going to get positive results. And I'm starting to see some of those calls now, and even on the member side, we've had a few members leave because of market performance. And same thing, back in March 2020, we had a handful of members who kind of threw in the towel then, and the same quote, when the market gets better, I'm going to get back in. And those members who quit during that time due to market performance, when the market did start to rally, for them psychologically, it was hard for them to get back in, because when it was safer, we were back at highs, and it was like, wait, the market is rallied 50% off lows. I need to wait for the next crash to get back in. And then it just is right. Like, it's this constant wheel of like, I'm waiting for this thing to happen. And okay, we're at highs, you're waiting for the crash. Okay, we're at the crash. No, I need to get back to highs. And that's something that it can keep you out of the market for years, if not decades, because you're trying to wait for this perfect time. And unfortunately, you very rarely you're going to get that.
This is the perfect time. This is it. This is what they've been waiting for. It's just when the prices come down, no one wants to make the purchase. That's it.
Yeah.
Just keep dollar cost averaging. I got another good news is so at the top of the market, Ray Dalio came out and said cash is trash, like famously, like literally marked the top. And today he came out and said we're heading to a 70s inflationary environment. Get as much cash and invest in inflationary goods as you can. So maybe we're getting close. We're getting close to that peak in inflation. So where are we going from here?
Top ideas.
Yeah. So there are pockets of strength out there. I've been gravitating towards the like utility names, oil and gas. I'll share this SO I've been into. This one looks great, and there are a lot of names that look like this. AEE, very similar. Strong uptrend, comes down, consolidates for 4 weeks, headed on the way back up. AEP, same thing. This ALB, where we've been talking about a lot, the lithium trade. This company came out and let me draw a little trend line for you. This company came out and so they upped their guidance pretty much by 100% when they came out to earnings on this day. That caused the severe gap up. And then last night, when we began buying the stock, they revised earnings for a second time. I don't know if I've ever seen that, where they revised it and said, it's actually, we doubled it last time. We actually want to increase it another 30-40%, just the guidance, because the orders we have and the market, the orders we have coming in over the next year are way outpacing what we thought. The supply and demand dynamics of the lithium market are just very favorable for producers right now. So things like that. I still believe that earnings drive the market. That's why we see the names like Exxon at highs, because these oil companies are killing it right now. So it should be no surprise that those names are leading the market. And now, you see the names like we talked about the snap warning. And now, that's in the dumpster. They're worried about their growth is not going to be there. They've slowed down hiring. So those companies aren't going to have the earnings. Meanwhile, the utility sectors, the oil and gas, the lithium names, natural gas, things like that. They're going to continue to have strong earnings. So that's kind of where I'm gravitating my energy, my risk. I think I had some others on here. No, I touched on them all. And then, this other one is LTHM. They're in the lithium market as well, but you got to wait for a pullback or some sort of consolidation in this one. Looks like 28 is kind of that spot. So, keeping the watch list slim. Don't want to get caught doing too much out here. But what are you looking at over there?
You can keep your screen shared. The one I want to go over is XEL. Your screen looks way cooler than mine.
Okay.
So again, it's XEL. Again, you're talking about utilities being strong, risk off. People are afraid. It's flight to safety, utilities, lower beta, flight to safety. It's XEL flagging out all-time highs. Even Jake, if you zoom out more, you put up like a weekly, maybe even a monthly. You have to go back a little bit further. Yeah, there you go. Okay, so yes.
You want to get a monthly?
No, we can. That was fine. You can the weekly. Anyways, if you just move that horizontal, yeah. So you can just see pretty much that this,
There's a weekly, sorry.
Yeah, but if you move this line above to 76 to just kind of highlight that prior, yep, there we go. Okay, so my emphasis is, again, we can see the prior all-time high that was kind of November 2020. That's when the newer traders are kind of chasing the all-time high. There's no setup there. The stock subsequently pulls in, starts to kind of base and consolidate over the next couple of years, and it works its way slowly back to these highs. And Jake, before you mentioned, and this might have been the last chart talk that we lost, was like with the Amazons and the Facebooks of the world that are kind of out of favor now, and it could take a few years for them to come back into favor. This is kind of a perfect example of this, where XCL is obviously nowhere comparable to Amazon, but just chart wise, this was a stock 2 years ago that was at an all-time high, and it's taken 2 years to get back to that all-time high. And that's something that I think a lot of traders and investors discount, the time it takes for these charts to rebuild. But when they do rebuild, now we can look to buy 76 versus 72. You're risking $4 in a lower beta utility, and that's very strong. That once it is able to push above 76, the path to least resistance is often going to be higher, because everyone who owns this stock at any point in the past is profitable. If you bought it yesterday at under 76, you probably bought it 10 years ago in the 30s. Everyone there is happy with the name. Where on the flip side, if you think of like Shopify's or the Amazons of the world, when they're near 52-week lows, all those investors are not happy. Most of them aren't happy, and they can't wait to find reasons to sell. And that's why it takes so much longer for these stocks to get back to highs. But when they're finally back up there, you can get those easier moves. But in the beginning, newer traders, even for us, the prop days was hard to imagine that. We just want to short for 76 because we think it can't go higher. So that's kind of my main focus for the weekend, is this XCL, this utility name.
That was my energy company in Denver. It was Excel Energy.
There you go.
There you go. Great company. Good heat. Their heat works.
It works good. So talk about,
good.
I'm sorry. Good and bad trade?
Yeah. I got my screen up, so I'll just hop into all my stuff. All right, where do we want to start? So first and foremost, I was talking about this Apple short forever. It was like, when this was the only name holding up, and I was talking about it for weeks, I was like, this name's just got to break down. So we're filming chart talk here. I don't hit it short through this first 152, comes back, retraces the move. I try to short it into this 8-day moving average on the retest. I do not hold any stock. And then the next day, what happens? It pukes and gives us another move. And I missed both those trades. I even took a loss on that. On the retest short. So very frustrating in that regard. When you're keying in on something, you got and it works out in your favor, you gotta make money on it. That's trading. What else is there's Oxy worked out really well. Shouts out Django. I think he's buying this one every single day. But so we were looking yesterday and we were like, where's the strength? And the strength was still in all these energy names and things like that. And this just gave such a great intraday setup. So this is yesterday's action. I bought a feeler here, 63.50, and then added size on 64. When we got that confirmation, held it. And then I got out of some today, 66, 65.50. It comes down, it holds my entry price. And look at this volume that comes in right there at noon when, you're not expecting big volume. Gives me a push up. I get out of some stock. And this is me puking some stock up when we're filming the last chart talk, saying better have too much going on right now. So I puke some up right there. I still have a good position. So we'll see how that one wants to close. I'm holding some of this SO. Again, trying to hold this one against this 72, very similar to that XEL that you were talking about, where it's like it'll be a slow grind there. This isn't the name that breaks out 10% a day, so you kind of gotta know what you're dealing with there. The CHK natural gas. This has been my best trade all month. Actually, I killed this one. So I was buying this Friday. I was buying this 90 area. Got out of some, got a little too heavy, but still held on to a very big position. And I was getting out of some today when the market was pulling in 96, 95.50. This one still looks like it's got some legs, but now I got to let it flag out and kind of, digest that move. And then last but not least is this ALB, which we've been talking about a lot. This is that lithium name. I believe this one goes much, much higher. I haven't seen a company revise earnings like they have. I still believe earnings dropped the market. So, but the only thing is you got to give it room. So the closest stop right now has got to be the 235. The real out is this 228 here. That's where I'm giving, the bigger chunk of my stock. But you got to be nimble, and you got to know where the strength is going in this market. That's the one thing we've seen over and over again is, you try to buy up these tech names and things like that. They're just not working in your favor. Look at these Qs. It's like NASDAQ closed strong yesterday, and then we saw that same action. Strong close, pukes it up the next day. So, definitely more of a difficult environment. You got to be keyed in on relative strength, and you kind of got to lose your love for tech names for a little bit. That's what I got to say about that. Where are we going from here?
Book of the week.
Book of the week. Yeah, you got it.
All right, so cover is kind of ripped again, blue for whatever reason. Obviously, all the books that I read. This is cash flow quadrant. It's like from the Rich Dad Poor Dad series, books from like the 80s. The big thing with this book is it breaks down his 4 quadrants. So there's the employee, there's the self-employed person, like myself, and there's business owner and investor. And his big focus is that his goal is to get out of the left side of the quadrant, which is, the most employed people are top left. He wants to get into the business and self-employed investor side of the quadrant. So honestly, even though this book is pretty old, very simple, kind of, broad financial advice that I think is still even relevant today, kind of understanding your assets, your liabilities, things like that. So, pretty easy book, but more about his, again, you mentioned like Ray Dalio, like his pitch was, cash was trash back then. He's trying to raise AUM, and now it's, to get back in the market. And with
Did we say that? Wait, we said that one this chart talk, right?
Yeah. So, but I think a lot of these like bigger people, we have to know like what their sell is. So for like Rich Dad Poor Dad, his thing is real estate. So he's always going to spin real estate in a positive and say the market's horrible. But then when you start to see these people, like, what their sell is, you can kind of read between the lines of it. But honestly, very good book. Kiyosaki,
Robert Kiyosaki.
Yeah.
What do you think about him?
He says the market's been crashing for.
Yeah, every year, and then we finally get the move lower. He's like, I told you.
But again, he's selling, selling real estate. But can't knock it. What about you?
So I got a little more into this insider buy super stocks. It's actually, so I got into more of the details. I would say his strategy is what he tries, or in the book, to kind of his spiel. It's probably a mix between Mark Douglas, trading psychology. Like what's the book? Not Good Trade, Bad Trade. Mark Douglas, Trading in the Zone. So he takes a lot from Trading in the Zone. He takes a lot of William J. O'Neill's stuff, which is the growth stock stuff that I love. And who is the third one? God, I forget. But it was pretty. It's pretty basic. One of the things he looks for that's different from us is that he loves, looking at insider buys and sells. He wants really small cap companies because he wants under $10 name stocks, things like that. So it's like he'll have the 10,000% performer, but he'll have a lot of trades that just like Q can go to zero type thing because he's buying these trash companies. Yeah. So I think he hit it at a time when small caps were going crazy. So he could have that type of return. But overall, it's pretty good. I mean, there are a lot of similarities in how he looks for stock. He wants to see earnings growth, earnings power early on before it gets noticed by the market. And then when it starts getting noticed by the market and it breaks out a huge base, that's when you increase your position. So, all in all, it's pretty good so far. I'll dig more into it, see if I can get any more info out of them, but just, 6 out of 10 for now.
All right, cool. One last thing, Shaker. So far, we've sold 25 pre-orders of the Common Day watch. We do have a few left. So if anyone does want to grab one of these, when we get the other 99 in, just shoot us a message and I'll get you onto the pre-order list. A little Common Day.
All right.
So
Looks like
we made
did
it.
it.
We got a sleeping puppy, so we have to just make sure he continues to sleep for the rest of them. Again, guys, if you guys are still with us at this point, and you haven't.
Yeah, how many rooms do you have in that big old house of yours? How many rooms? How many? How many? Answer it.
1, 2, 3, 4. 6. I guess 9.
9 rooms, huh?
They're Velcro dogs. They're right next to you. We're both in the smallest rooms, and the dogs are right here. That's just their nature. But thank God, he's sleeping this time. All right. If you guys still here, drop us a thumbs up, and see you guys next week.